Hi everybody, this is my third video in a series of 3 videos on the topic lease modification in the books of a lessee under IFRS 16 or IND AS 116. In part 1, I covered the concept and accounting treatment of lease modification. In my second video, I solved a few simple accounting questions relating to this topic. And in this video, I will be solving a more complex example in which there will be multiple types of lease modifications. If you have not gone through my earlier 2 videos, kindly do, as it will give you a good base to understand this question. Now, before we go into actually solving the example, let us do a quick recap of the accounting treatment. So, when there is a lease modification, after assessing whether the contract is still a lease or not, you need to check if there is an increase in scope. If there is an increase in scope, then you need to check whether the increase in consideration is commensurate with the standalone price of the right of use of that asset. If it is, then you cannot club this lease with your existing lease. You need to record it as a separate lease. If it is not an increase in scope, the next check is if it is a decrease in scope or lease term. If it is a decrease in scope or lease term, then you need to reduce the lease liability as well as the ROU asset proportionately. And any difference is to be taken to the P&L account. If it is neither of these, any other kind of lease modification, you need to remeasure the lease liability using the revised discount rate and adjust this increase or decrease in lease liability in the ROU assets account. Alright, with that base, let us start. Miss X leases an area of 3,500 square meters for 10 years at an annual rent of 50,000 per annum payable at the end of the year. Miss X's incremental borrowing rate is 6% per annum. At the start of the 6th year, the lessor and lessee agree to increase the scope to 5,000 square meters at an annual rent of 100,000 per annum. The increase in consideration is not commensurate with the standalone price of the use of additional 1,500 square meters. The incremental borrowing rate at the beginning of year 6 is 7% per annum. They also agree to reduce the lease term by 1 year. How will this lease modification be accounted for? So over here you see there are 2 very important lease modifications. The first one is there has been an increase in scope and rent. The second one is there has been a decrease in the lease term. Let's make a summary before we start solving the example. The scope was at the beginning is 3,500 square meters. The lease term is 10 years. The lease rent is 50,000 per annum and the discount rate is 6%. The scope has now increased to 5,000 square meters. The rent has become 100,000 and the discount rate is 7%. The decreased lease term is not merely because of the lapse of years since the date of commencement. No, this is an actual decrease in the lease term, and what we have remaining is 4 years. Alright, the solution will be journal entries. We then come to working notes. As we've seen in all lease modification problems, the first steps is to find out what is the value of the lease liability as well as the ROU asset on the date of lease modification. For that, the first working note is lease liability at the beginning of year 1. Now the years is 1 to 10. I am using the annuity method to compute the present value. In my video on how to compute present value, I have discussed this method in detail. It is much easier than calculating the discounted cash flow for each of the 10 years. But if you are not comfortable using the annuity method, please go ahead and use the conventional method of calculating the discounted cash flow for each year. Please note that there will be minor rounding off difference between the present value calculated using the annuity factor and the discounting factor. The annual rent initially is 50,000. The annuity factor is calculated 6%. And the annuity factor at the rate of 6% for 10 years is 7.3601. 368,005 is what the lease liability would have been initially recognized at. How do we get to the lease liability at the beginning of year 6? Working note 2, closing balances of lease liability. We only need to calculate it till the end of year 5 because the lease modification happens on year 6. The opening balance in year 1 is the lease liability. The interest is at the rate of 6%. The repayment is the annual rent, and the closing balance is opening balance plus interest minus repayment. The opening balance next year is the closing balance. Copy this across. Balance of lease liability on the date of lease modification is 210,619. Similarly, let us calculate the balance of ROU asset on the date of modification. Working note 3 is closing balances of ROU to 0 to 5. 0, the opening balance was 368,005. Following the straight line method, you get the depreciation at 368,005 divided by 10. The closing balance is opening balance minus depreciation for the year. So the value of the ROU asset is 184,003. Now let us assess the modification. We know that there's been an increase in scope, but they have told us that the increase in consideration is not commensurate with the standalone price of the use. Therefore, we do not have to record it as a separate lease. There has been a decrease in the lease liability and we need to reduce the ROU asset and the lease liability proportionately. How do we do this? You see there are multiple changes that are happening over here. We ignore all the other changes and look at what would the lease liability have been if only the lease term reduced. That will be our next working note, and that is revised lease liability attributed to decrease in scope. So now it will not be 1 to 5 years but 1 to 4 years. The annual rent, we take the original rent because we are not accounting for change in consideration. If we go to the summary, the original rent was 50,000. The discounting factor, should we take the revised or the original? The original. We are not changing anything but the lease term. So the original was 6%. The annuity factor at 6% for 4 years is 3.4651. So the value of the revised lease liability attributed only to the decrease in scope is 173,255. Let us calculate the proportionate decrease in lease liability and ROU asset. What has decreased? The remaining years has decreased. Lease liability, ROU asset. The remaining years originally was 5. That has now reduced to 4. When the remaining years was 5, the lease liability was equal to 210,619. But now we have just calculated it's 173,255. How about the ROU asset? The ROU asset, when the remaining number of years was 5, it was 184,003. When it is only 4, we multiply it by 4 and divide it by 5. 147,202. The lease liability has reduced and the ROU asset has also reduced. So this is going to be our first entry, that is reducing the lease liability and the ROU assets proportionately. Lease liability account debit to ROU asset account. The difference is supposed to go to the P&L account. Lease liability is debited for a value of 37,364. ROU asset is credited for a value of 36,801. The difference goes to the P&L account. So this is your first entry. Now we need to account for all the other differences. What is the method that they've told us? They told us calculate the revised lease liability using the revised discount rate and the adjustment to be taken to the ROU asset account. So that is our working note number 5. The revised lease liability at the beginning of year 6. This is the revised liability taking into consideration all the changes, including the decrease in scope. So it is 1 to 4, annual rent. Cash flow, the revised lease rental is 100,000. Okay, the annuity factor at 7% for 4 years is 3872. So the revised lease liability considering all modifications is 338,720. What is the lease liability in the books as of now? 210,619 without any modification. Then you have less the decrease in lease term, 37,364. What is the lease liability that you need after considering all changes? It is 338,720. So the difference for which you need to pass the accounting entry is 338,720 minus existing lease liability on the date of lease modification less modification on account of decrease in scope. It's 165,465. The entry is also passed at the beginning of the 6th year is ROU assets account debit to lease liability account 165,465. And so these are the two entries that form a part of your solution. The first one relates to the decrease in lease term and the next one relates to all the other modifications. Thanks everyone for watching this video. I hope you found these 3 videos on lease modification helpful to you in understanding the concept. I will be covering more topics under IFRS 16 or IND AS 116. Till then, as always, all your comments, queries and suggestions are welcome. Thank you very much. Bye.